Welcome back. Well, gold prices are the one asset class which have been doing well amidst all this global volatility. George Alexander Muthoot is Managing Director at the largest gold financier in the country. Mr. Muthoot, it's a pleasure to have you with us here. Thank you very much for your time. The general belief is that when gold prices rise, it helps gold financiers as well. I mean, potential customers, existing customers are able to borrow more against the same quantity of gold. Could you tell us historically if that is the case?
Thank you. Good morning, anyway. As you said, international gold prices are hitting historic peaks. I think they have even breached the $2,000 mark, US dollar per ounce. I think it may go even up to 2050 or up to 2100 if the the problem in the financial sector or the banking sector in the West persists. So it can still go up. Having said that, you have answered the question, or you have answered what everybody has in their mind. When gold prices go up, the gold loan demand also goes up. Yes, correct. It is not relative or exactly proportional to the gold price. It is that when gold price goes up, more people realize that the gold ornaments which they have are more valuable. Definitely, when they read in the newspapers that gold price is going up, the little or the amount of gold they have with them, they realize, they understand its real potential. And I'm sure this will help more and more people to come into the organized sector for lending against gold. So that is one thing we see. For the last 1-2 years, we have seen that more and more people are using the gold loan as a means to take loans. The banks have also advertised about this. So overall, the demand for loan is there, and gold loan is the easiest form of credit for even for a person without any CIBIL score or negative score, etc. This is the best option. But to answer your question, yes, when the gold price goes up, more people are able to take some more money on the exchange gold. That is the definite.
Okay, all right. Good morning, Mr. Muthoot, and always good hearing your thoughts. Well, higher gold prices could lead to better footfalls. Hopefully, the asset quality as well issues will be behind, because higher gold prices are obviously good for your business. Give us a couple of numbers, though. The banks, suddenly, they have upped their game. And yes, they're growing on a very small base, their gold portfolios. But that's clearly, hurting your penetration to some extent. My question to you is, what kind of AUM growth are you factoring in? For the past quarter, your tonnage, I think, was 175, which was down close to 100% on a quarter-to-quarter basis. So what kind of gold AUM growth are you factoring in for FY24? If you could give us in value or tonnage terms.
Yeah, see, the value of, I don't think the tonnage is a real value. What you should look at is the amount of loans you have given, the AUM. The AUM has been flat. Yeah, the AUM has been flat in the first 2 quarters. Third quarter, it has stabilized and it has started growing. And we should see a decent growth in the fourth quarter. We had said earlier that we would be looking at, instead of 15%, at least a 5% growth in the fourth quarter or finally the end of the year. So we may end the year with definitely more than 5, 6, or 7% growth in this year. Coming to the second year, the next year, what is you asked, 24, I think we should see definitely come back to the old growth rate of 15% in the gold loan portfolio. What we expect financially 24, yes.
So mid-single digits for this year, and for next year, you're guiding for mid-teens growth, gold AUM growth.
Right, correct. You're right, yeah.
All right, that's great to hear, Mr. Muthoot. And I'm assuming some of it is driven by what you told us the last time you were with us. You said, and I quote you, that newer competitors like banks and NBFCs are starting to realize that gold loans is not a bed of roses, is how you put it. The feedback from your staff on the field is that enthusiasm for pushing gold loans is fading. Enthusiasm on the part of these banks, NBFCs, etc. Have you seen those trends becoming stronger?
Yeah, what growth or what high growth they were the banks, etc. I wouldn't say about the NBFCs. What the private sector banks and the public sector banks were showing in the first 3 quarters, I think it is waning. The growth rate is waning, but still they continue to grow, but not at the pace at which they were growing earlier. That's exactly what I said. It's not a bed of roses. Operationally very challenging. not at all easy, operationally challenging, especially when the portfolio goes up, when the portfolio become big, challenges also there. But having said that, earlier there was always a talk about regulatory arbitrage in favor of NBFCs. But today, if you look at it, the regulatory arbitrage of gold loan NBFCs versus a bank is today in favor of the banks. Banks have a regulatory arbitrage which is favoring them, which is not there for the regulated NBFCs. That is talking about the loan to value. The loan to value for the banks, the bank regulator had increased it during the COVID period from the 75% to 80, 85, and 90 only for the banks. But it was withdrawn more than 15 months back. So in January of 2022, it was withdrawn. But even now, quite a few of the public sector banks and the private sector banks continue to go more than the 75% LTV. We have taken it up as an association. The Gold Loan Association has taken it up with the regulators, and we have put our point that there should be a level playing field.
All right. Mr. Muthoot, in the last quarter, there was some improvement in your NIMs because those teaser loans, they got out of the way. So that's why your NIMs improved to around 11.9 to around 12% approximately. Now you're in a catch-22 situation, actually. I'll tell you why. Because either you grow your book or you skim off some kind of yields or some kind of margin. So we'll see how that goes. But the cost of funds is going up and bulk of your borrowing is from banks. What is the outlook on NIMs, give and take everything? The rising rates, the yields, what are the NIM numbers we should work with?
So I think the cost of borrowing has gone up. In the last 1 year, it has gone up by about 100 to 125 basis points, the bank borrowings. So not only the bank borrowings, the NCD rates, whatever the borrowing rates have gone up, we have been able to pass on a part of it to the customer. And talking about yields, we would talk about the spread. We have had a very good years. We have a spread of 12, 13, etc. But going forward, it should stabilize at 10 to 11% the spread. We should be able to stabilize going forward also.
Okay, got that. Just one point on that, the fact that you've approached the regulator. How much of a factor is this? Many of these institutions lending at LTVs of over 75%, and you asking the regulator to level the playing field. Are you hopeful something will come off the representation that all of you have made? And by when?
Thank you. We have made the representation. We hope it will come. But I think a better solution would be to ease the LTV and give the credit risk monitoring mechanism to the lending institution itself, because we have been in the field for such a long time. If you want to do little more than 75 or 75, 80, let the credit call be taken by the institution. That's also we have put forward. But anyway, we are trying to learn to live with this, and probably we hope the regulator will put a level playing field with the banks, etc., as far as the LTV is concerned.
Okay, all right. Final question, Mr. Muthoot, before we let you go. You have got approval to open, I think, 150 branches from the RBI, which is good news, and that's much better than your nearest competitor. Could you tell us how many have been opened so far? How many are you looking to open? And also, I'm looking at various job portals. You're hiring as well, at a faster clip. So you're more confident, I think, in terms of growth as well as opening branches. So give us this branch number, how many have been opened so far, and how many will open in FY24?
Okay, so of the 150, we have already opened 140. Another 10 will be opened in this month. And after that, we are approaching the bank for the next set of 150 or 200 branches. So at any rate, we would be opening, we can go only up to 200, 300 branches maximum in a year. But it is not that we are just waiting to open branches, because the existing branches can also take up more than half or a little more than half their existing business through the existing branch itself. But going into new geographies, new areas, new places, new locations is definitely a thing which we have been doing. And so to answer your question, the 150 which we have got permission, it will be completed this month itself. In the next couple of days, it will be completed. And the next set, we should be going for approval and hopefully opening those branches in the next year. Maybe 150, 200 is in the next year also.
All right, Mr. Muthoot, we'll leave it there. Thank you very much for your time. Appreciate you joining in and running us through what you're making of things at this point in time. Definitely expecting an uptick for FY23 AUM growth of about 6-7%, but 24 the growth is expected back at 15%. From Muthoot, and reiterating some of the comments, emphasizing that competitive intensity seems to be coming off a little bit from banks and BFCs, banks especially. All right, the market is doing what it is doing. I mean, about 30 points higher, huge amount of volatility still continues. 30-40 points is getting cut up and down just like that. Midesh Thakkar is joining in on our special segment, Charting Trends, where we look at